Welcome to our fourth quarter 2021 property overview for City View Apartments. City View is a 150-unit multifamily asset located in Chattanooga, Tennessee, and was acquired in March of 2018. To start our fourth quarter overview, we'll jump right into our distribution review.
City View Apartments received the lender-held COVID reserves totaling $285,226 from the refinance in 2020. These funds were held for 1 year and released at the end of Q4. This allowed the property to distribute $190,539 in preferred returns and $94,687 in return of capital.
Thanks, Duncan. Yeah, we were very excited to get that $285,000 sent out. It was a little bit of a curveball when we closed that loan. They added in that COVID reserve component to it, and that expired on November 18th. And then we successfully got that money back from the lender and were able to make the distribution. When we look at our cash flow on City View, really the first thing that stands out is the revenue chart, where we continually have year over year and month over month revenue gains. This asset has performed very well in its ability to continually recognize increases in both market rents and having retention and driving those rents as well. So we've performed very well here on a revenue side. We beat our goal for the year. You can see fourth quarter was ahead of third quarter. That is the normal trend we're seeing with City View. On the OpEx and the non-controllable expenses, we were over in both of these categories. If you look at the expense chart, which shows our controllable operating expenses, our retention was only 50% in the third quarter. And that really leads to higher interior repair costs and maintenance time to make those repairs. So we had some increases from that in the third quarter, which bled into the fourth quarter a little bit. But then we finished our fourth quarter with 79% retention. That's back in line with our normal trends we've seen at City View. This has always been a high retention property, and we've really hit our low points of retention at the end of 2020 and then Q1 and Q2 of 2021. So we had that drop, and now we feel like we are back to our higher retention numbers. We're seeing that across the portfolio as well, with a lot of properties really seeing significant retention improvements coming through the end of the fourth quarter. The other part, we were over here for the year, $231,000 on non-controllable expenses versus a goal of $170,000. And you see that in the fourth quarter of over $100,000 in non-controllable expenses versus last quarter, we only had $40,000. This has really seen an increase in property taxes. All of our property taxes hit in the fourth quarter. So when we see that we get a higher property tax bill, we estimate them for the year. And if we're off on that estimation, we assume 10% every year that the property taxes are going up. If we're off, that's why we see these big adjustments hitting specifically in the fourth quarter to allocate more funds to pay our property taxes. And we'll plan for that going into 2022, and then we'll have higher revenue targets for the year as well. That'll push our renewal rates up. It'll push our market rates up. Sliding over to our cash reserves here, due to the refinance, we're fully set on our reserves on this property. See our target for the fourth quarter of $394,000. We have that right now, so we're in good position. If we have any CapEx or heavy turnovers that come up, we're in position for that. And we do expect that as long as we maintain that, we're going to make distributions each quarter as we're able to do so. Last part here, if you look at our equity in distributions, and at the very bottom here, you can see the lifetime pref due and the lifetime pref paid. So we made a good amount of our pref payments, and we distributed this return of capital based on when we actually got that money from the beginning of our refinance, which was December 16th in 2020. We did that refinance. So that return of capital allocation there goes all the way back to that time frame when we received those proceeds. So we're almost caught up on our prefs, and we should be continuing to make preferred distributions going into 2022. We'll probably not have profits in 2022, though, unless we see some significantly higher revenue gains on our renewals and new leases.
We certainly thank you all for watching this property overview video for City View. And we do invite you to join us for our residential, commercial, and retail live Q&A broadcast on January 25th at 11 a.m. and 2 p.m. Eastern. If you have any questions regarding this property update or overall strategy, we encourage you to submit any questions you may have as you register for the upcoming live streams. If you scroll down, you can find the registration links for both live streams in the description box below. Thank you again, and we look forward to seeing you soon.